Hello traders, this is Alexander from the Forex Authority and the FX Model software. Today I'm going to cover the Breakout model and how the Breakout fits into an entire trading system. The purpose of today's video is to cover the breakouts, which are used to capture moves whenever the market stalls or is in congestion. This is being shown in TradeStation. The software works in both TradeStation and eSignal. And the breakout is designed to be used on the 15-minute charts. And in this particular example, we're using the pound USD. And let's just go over some of what you see here. You're seeing the two lines, the blue and the yellow line. They're the EMA 3 and 14. And what you also see here is a series of green dashes. And what they are indicating are the price as the system notes congestion. It starts to look for a short or a long entry. In this particular case, after 2 bars, price went through 97.16 and you were filled on this particular order. And you'll notice that this line has a particular length, and that happens to be 20 bars. And what that's utilized for is if at the end of the 20th bar you were not in the money, in other words, you weren't making money on the trade, you would gracefully exit this particular trade. And so let's go and have a look at the rules of the system, and we'll just cover them, stops and exits. Your stops are placed 50 pips from entry, plus broker spread. And they are moved to break even when you're up 50 pips. The exits are based on a first come, first serve basis. So the first type of exit is if your EMA 314 lines cross over, and that's employed if you're up 30 pips. You can also look for any dots in the opposite direction, and we employ that if you're up 50 pips. And you can exit gracefully if after 20 bars you're not in the money. We just covered that one. And lastly, a stop loss. So I'll switch back to TradeStation and we'll see how this particular trade panned out. We went short and we were waiting for a dot in the opposite direction or the EMA 3 and 14 to cross over. And in this particular case, the EMA 314 did cross over. And they crossed over at this particular point right here. And I'll just bring the data window over so you can see what happens there. At the close, we were at 605. We entered at 716 for a total of 111 pips. I'm going to pan to the right on here and just see if we can find a couple more examples that we'll go through in detail, and then I'll show you a summary screen for the last 2 months in the pound USD. Okay, in this particular example, this is an example of a stop where you were stopped out. The market, after a period of congestion, was looking for both a short entry down here and also long. And in this particular case, the market went up and the system triggered a buy at 96.97. And the market immediately reversed and you were stopped out for minus 50 pips. I've placed 2 numbers here. The minus 50 indicates the current trade that I'm looking at, and the 61 indicates the cumulative trading since that first trade. So we're up 61 pips at this point. And I'll just pan right. I'll just show you a couple more examples so you fully understand the system. This is a great example here. The system was looking for a short or a long. In this particular case, we broke up and we were filled at 809 and an opposite dot triggered right here. And I'm going to move my data window in so you can see what price that was. And if we look at the low of that candle, it was 858. 858, what you have to do is you have to subtract the validation price, which is 1 pip, so it's 857. And we were long at 809, so basically we were up 50 pips. And now if you were an absolute stickler to the tick and you didn't exit right there for approximately 50 pips, you can also wait for the EMA crossover, because technically, if you look at that candle, the low there is 858 minus 1 pip of validation is 857. which is not technically 50 pips in the money. So for those of you that waited for the EMA crossover right here, and you were following the rules to the letter, you would have exited right there at a close of 864 for 55 pips. So that's how I calculated it. Okay, and now I'm going to look for one last example, which is a graceful exit, where a graceful exit was actually employed. Here's an example of a breakout, which signaled it started to go long, and after 20 bars, you'll notice that on the close of the 20th bar, this trade had gone nowhere, and so you would have exited here, gracefully exited here for 0 pips or +2 or -2. But it's a great example of where a breakout doesn't actually continue, and it's a great way to minimize your losses. So as you can see, I'm just moving along here, and this just represents the total for that particular trade, and this represents the cumulative total. And what I'll do is I'll start to pan right here, and you can just see how over time you gain, you lose, but generally what happens is over the 2 months, I'll try and move a little bit faster here, and what I did is I took all of these numbers for the last 2 months, and I've summarized them at the very end for you. And what I'll do is I'll just pan right all the way to the very end for the last 2 months. And if we go right to the very end, I've created a summary here, and on the last trade here that just occurred yesterday, 105 pips exiting on that EMA crossover. And now I've created a summary here. What we had was 213 pips this month, 229 pips last month, for a total of 442 pips. This is pretty standard in any of the 4 currency pairs that you see approximately 200 pips a month. That broke down to approximately 40 trades, or 20 a month. And what I also did is, just for interest's sake, I noted how many of those occurred during the Euro time zone. And what I mean by that is if you're in the North American area and you sleep between 11 p.m. and 5:30 a.m. or 6 a.m., I noted whether or not those occurred during the exclusive Euro time and whether or not they occurred during the exclusive North American time. And you can see that approximately 5 a month of the trades occur during that time. And so the question to ask yourself is for approximately 200 pips additional in your trading system per month, would you be willing to have a text message alert you on your sell, get up, place the trade, place your stops, and move on? And certainly, personally, I can see a great benefit in adding the breakout to your trading system. Have quite a lucrative trading opportunity and the ability to add the third component to your entire trading model. So I hope you enjoyed this video, and if you have any questions, please feel free to contact us at info@forexauthority.com, and have a look around at the rest of the videos on the site, and have a great day. On behalf of the Forex Authority, I'd like to thank you for joining us on this video. And if you'd like to visit our website, please do so at www.forexauthority.com.